Global equity markets enjoyed a solid quarter led by a strong US market. The US economy proved more resilient than expected and inflation continued to moderate during the period. The rebound in markets was particularly led by the tech-heavy Nasdaq, which was up 12.3% for the period, driven by investor enthusiasm for all things AI. Closer to home, the small cap indices were more mixed. Negative news flow in sectors such as consumer discretionary and a softer materials sector were offset by a stronger performance within the IT and industrial space. For the quarter, the ASX Small Ordinaries Accumulation Index closed down 0.5% for the quarter, and the ASX Small Industrials Accumulation Index was up 2.3%. Pleasingly, the OC Premium Small Companies Fund outperformed both indices, up plus 4.1% for the quarter after fees. Temple & Webster was an outperformer for the quarter, up 70.9%. This came following a better than expected trading update in May, where the company announced a return to positive like-for-like sales trends. Web traffic data, which is closely followed by investors, continues to show this trend improving, which has further driven the share price up after the quarter. IDP Education, however, was a detractor, down negative 19% for the quarter. This came following an announcement by the Canadian government to open up what was previously a monopoly market for IDP's IELTS English test to several other testing providers. Fortunately for the fund, our position in IDP at the time of the announcement was small, and we have since added to our position. We feel that the downside is now more than fully factored in, and at the same time remain very positive on IDP's other business, its student placement business. In terms of positioning, our preference is to continue to add to higher quality names, particularly as we're closer to the end of the interest rate tightening cycle. Names such as IDP Education, which I spoke about earlier, and Xero. We have maintained our higher weighting in names with strong pricing power, such as Seven Group and Kelsian. We have added names in the portfolio which we think will be long-term beneficiaries of the trend towards generative AI, such as the data center providers NextDC and Macquarie Technology. We continue to be cautious on the more cyclically exposed names, both domestically and offshore. However, do note that valuations have come off, and we are building a list of names to potentially invest into at the right juncture.